Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Santosh Nair.
Well, Santo, another down day for the markets, given the fact that yesterday we saw a 1% cut coming in, of course, after Fitch had downgraded US credit rating. And today we picked it up from there. In fact, we've ended below that 19,400 mark today, Santo. Even the Sensex yesterday took out the crucial 66,000 mark, and today as well, it's somewhere around 65,240 or thereabouts. Broader markets had succumbed to selling pressure around midday, but right now at least the mid-cap index has managed to claw back just a little bit, but ended higher by about 0.2% or thereabouts. Amidst all the gloom, I want to point out the fact that there's some good news coming in for us, given the fact that Morgan Stanley has upgraded India, second time in 4 months. Last time, 4 months earlier, they had upgraded India to equal weight, and this time around they have upgraded India to overweight, and they've downgraded China. So all this correction that is happening right now, most experts that I have spoken to have said that this is one correction that they were waiting for, given the fact that it gives an entry point to people, right? So in that light, the correction continues on the Lal Street. All of the sectors in the red, barring the Pharma pack. Sun Pharma came out with numbers, good numbers, beat estimates. So that stock was higher in trade. Lots of red today, of course, across the screen. So all of your Realty, PSU Bank, rate sensitives, they were down and out. So among the Nifty losers, you have UPL. That stock hit a fresh 52-week low once again. You had Titan on the back of weak operational performance. ICICI Bank, ONGC Coal India, some losers. Gaining front, Eicher Motors. This company will be reporting earnings today. Divi, Sun Pharma, as I mentioned, and NTPC. Your takeaways for today's market, Santo, what are your observations?
Well, Nandita, I think the market at this point seems to be having an overdose of good news.
Yeah.
As they say, too much of anything is not a good thing. You had the Morgan Stanley upgrade coming in today, and not just an upgrade for India, at the same time it has also downgraded its rating for China. Now, till some months back, one of the big concerns was that China would emerge as a major contender for foreign inflows. But now, clearly, given the slowdown in the Chinese economy, that does not seem to be much of a threat. So, to a large extent, the Morgan Stanley upgrade doesn't come as a big surprise. People have been bullish on India for quite some time now. In the last couple of months, foreign fund inflows have been very strong. So, to a large extent that might have been factored in. But what seems to be a bigger problem at this time is that markets have run up a fair bit from the lows of March, which means that good ideas at reasonable valuations, that is something which many in the market say that they are not very easily available. Of course, if you take more risk, probably you might get some, but otherwise all the tried and tested names, most of them are now fairly priced at these levels. So, that is a big issue. Earnings have been a mixed bag. You had some positive surprises, you had some not so good numbers as well, mixed bag, but that is usually the way it usually plays out. Now, you have most of the news which has already been discounted. Prices have run up quite a bit, valuations no longer attractive. So, we are seeing some bit of profit taking, some money being taken off the table. Now, the tricky part here is, Nandita, you never know whether the correction is a deep one or just a shallow one. We will get to know that only later, but for now, all those people who have seen Nifty almost hit 20,000.
Almost, like within 9 points away from 20,000, then
whoop,
Infosys comes in and spoils the party.
So, it may seem that compared to the prices you were seeing till about a week back, things are looking cheaper now. Are they cheaper? We'll get to know in a while.
Well, yeah, that's something that we will love to find out as the earnings season progresses. But on that note, let's take a look at some of the stocks that are on our radar this afternoon. I'll start with IndiGo. Santo, numbers were pretty good, record profit, record revenue, and then you see the stock plunge 5% nosedive in trade, and you're like wondering what happened. So, first and foremost, the stock had run up quite a bit. In the last 3 months, the stock itself is up somewhere around 38% or thereabouts. So, could be sell on good news, given the fact that it's seen a very good passenger growth as well. There's been low cost, in the wake of a fall in crude prices, which of course is reversing now, which is why the concerns over crude prices in the second quarter, even though, management was on CNBC TV 18 and they've said that the Pratt and Whitney issue hasn't been a big one for the company just yet. And they've also clarified that, they're very confident of strong performance going forward. But you can't ignore the fact that, promoters have been selling stake in this particular company, and since the lock-in is over, they may look to sell more stake because they hold somewhere around 30% stake in the company still. So that is something that could be a dampener. But aside of that, if you look at what brokerages have said about IndiGo, Jefferies has retained an underperform rating, and it has pegged the target at around 2070 or thereabouts. It says that the pricing tailwind that was there could reverse in Q2. And Macquarie has also said that the yield could actually reverse, in fact could come in lower. The lower yield assumptions have also led Morgan Stanley to cut the FY25 to FY26 profit before tax estimates by 9 to 7%. So the concerns for second quarter are there, but then again, let's not forget that there is huge demand for travel. And in the third quarter, we'll see the World Cup also happening. So, there will be a lot of demand for travel going forward. So, maybe a coming quarter may not be as good as this quarter has been. But I think when it comes to FY24, things look pretty okay for IndiGo, given the fact that we have seen one airline go down under, and then, it has worked in favor of IndiGo.
Well, that's not entirely gone down under, because they're going to resume operations, though in a limited way. It still won't be a major challenge. But at the same time, I think the market in the case of aviation stocks seems to be focusing on the here and now. Is that typically the first quarter, or rather this quarter, which is like from July till September, that's a bit slack for aviation companies. I'm sorry, it's the second quarter. It's a bit slack because people travel reduces during this period,
summer because holidays are over,
it rains and all, right? But if you were to look one more quarter further ahead, as you mentioned, there's the World Cup, there's G20 and all those things, and probably those could keep demand pretty strong. But again, because prices have run up, oil prices are slowly firming up a little bit, you're seeing some kind of concerns, and probably that could explain why investors may want to take some money off the table. Well, my stock for this afternoon is MRF. Now the stock has hit
India's first 6-digit stock you're talking about.
Definitely, and good reasons for investors to feel upbeat about MRF. The company reported a strong set of earnings for the June quarter. Net profits up almost 376%. Sharp improvement in operating profit margin there. The total revenues grew by about 13%, but clearly the company now seems to be reaping the benefits of the easing in both its input prices because of lower crude oil prices year on year, that is, and also cooling off of rubber prices again year on year. So that's made a big difference. 13% increase in revenue, but the effect on bottom line is quite huge. Operating margins have also almost doubled to 18%. So that's something that has investors excited. But going forward, again, a lot will depend on the pace of recovery in the auto sector. Now, some feel that this auto recovery is still in its very early stages, and it still has some way to run, but the jury is still out on that. And if you look at the other stocks where earnings have been reported, it's been a kind of a mixed bag. CEAT also had a good quarter. Numbers were pretty strong, but the market has not taken it very positively. Probably they're not convinced that demand will remain quite strong, and which is why you saw some bit of profit taking in CEAT. Apollo again, good set of numbers, and the market in fact seems to have rewarded Apollo there. The stock price has been steadily inching up. So a mixed bag as far as the tire sector is concerned, and we'll have to see how MRF fares in the days ahead.
Right. I think for MRF, I think even though the stock has run up in terms of the value, but I think vis-a-vis the industry, the valuations weren't as expensive as you would think.
Yeah, but then the other thing about MRF also is that there's very little public information available about the company. You don't see too many analyst notes. Stock is very illiquid. They've never split the stock. So a retail investor wanting to buy the stock doesn't, unless he's got that money to spend.
Exactly.
Is happy buying 2 or 3 shares, which itself is quite huge. You don't see much of retail action there. Institutional holdings have also remained fairly steady. So, very interesting stock this, Nandita, I would say.
That's correct. I agree with you. Next stock on my list, of course, Delta Corp. Now, this stock has been in news ever since the 28% GST was mentioned. In fact, now, yesterday the GST Council did review this whole 28% taxation on online gaming as well as casinos, but then it decided to stick to it and will implement this from the 1st of October. It has clarified though that the tax will be levied on entry level bets and not on value of each bet placed. I think FM also explained it by saying that if you are buying coupons worth 1,000 rupees and you say 300 rupees on that and you reinvested 1,300, then you will only be taxed on the initial 1,000 that you have invested or placed the bet on, and you won't be taxed on the 300 rupees that is what you have won. So that's something, that clarity they have given, that it will be a one-time levy and not a repeat taxation. But the industry still believes that the tax rate of taxation is pretty high, because if you have bid for 1,000 rupees and 28% gets deducted there itself, if to break even, you'll have to earn that amount back, right? That comes to, if you are looking at 1,000 rupees, that will come to somewhere around 40%, which is 280 rupees, right? So that means that it will hurt demand when it comes to online gamers, and that's something that of course the stock has reacted to today. We saw the stock down 5%, even though there's been some kind of clarification coming in from the FM herself. But if you look at the stock itself, Delta Corp, I think in the last 1 month itself, the stock has tanked 25%. It has had some notable investors who had invested in the stock, like the late Rakesh Jhunjhunwala, but then ever since he exited the counter, the fortunes have been dwindling, and the stock has kind of not given great returns. In fact, I think I saw one of the articles that you wrote in the morning, and you mentioned that another notable investor has just made an exit last week itself. Yes. What are your thoughts?
Well, there is still some bit of uncertainty there. It's not a given that there will be any change in rules. All very clearly, the tax at the entry level itself, that is bound to affect demand. And as you pointed out, anybody who comes in with $1,000, he then needs to win at least 40% more if he has to make up for the tax, and winning in online game and casinos, it's not easy at all. So that's one side of the issue, and the government has said that it will relook it after 6 months to see whether there needs to be a change. So that's a big leap of faith. Now you have uncertainty, and you have the fact that a stock like Delta has not performed in a very long time. So would investors be very excited about the stock at these levels? Well, unless again you're quite brave-hearted and willing to bet that there could be a big change in the rules, then might be it makes sense. Otherwise,
I think pretty much and avoid, whenever I speak to some analyst or ask them for their views, they kind of say that okay, it's a wait and watch when it comes to Delta.
Gujarat Gas is the last stock on my watch list this afternoon. Now some cooling off of gas prices, and it did seem that things are turning corner. It does seem to be for Indraprastha Gas and Mahanagar Gas to a certain extent, but Gujarat Gas, clearly the sentiment has still fairly downbeat. That's because it largely caters to the industrial segment. Now the industrial segment, even the Ceramic and Tile Makers Association had said just about a month back that the alternatives like propane, they are still available almost on par with the industrial gas, the gas that Gujarat Gas supplies. In fact, it's even a little cheaper. So that being the case, a lot of people had switched away from or had switched over to propane, and unless the differential is compelling enough for large players like industrial players, which consume fuel in fairly big quantity, the pricing makes a very big difference. So that's one of the reasons that despite Gujarat Gas having taken 2 cuts over the last couple of months, it's taken a hit on the margins, but at the same time the demand is not growing as much as it would have liked it to, and that's why
like a double whammy.
Yes, so and you're seeing that in the first quarter numbers as well. Big drop there, almost 43% decline year on year. So that's the trouble with Gujarat Gas at this point in time.
Well, those were some of the stocks on our radar this afternoon, but I think we've come to the end of this edition of Closing Bell. With that, of course, if you have any comments to make or any suggestions, feedback, leave them in the comment section below. But for now, I think it's a goodbye from me and Santa. I would like to thank Santo for joining me today as Yatin is away. But with that, it's a goodbye from me and Santo. Thanks a lot for watching. I'll be back with the markets at 8:30 a.m. tomorrow, so don't forget to tune in. For all your other news and updates, stay tuned to Moneycontrol.